Hello traders, it's Thomas here from Vaga, and in this video we're going to be looking at how to correctly draw supply and demand zones. Now this is something that everyone gets a bit differently. I'm going to show you my method and what I teach my students. So what is a supply and demand zone, guys? Supply and demand is a price level or area that contains one type of market order. So a supply zone will contain sell orders, and this will allow us to take short setups from, and a demand zone will conversely contain buy orders, which will allow us to go long from. So when should we actually look for supply and demand, guys? We can look for supply and demand when a market is trending and we are looking to get involved mid-trend. So that is a market that is already on a bullish order flow or bearish order flow, and we're looking to get involved at the next supply and demand zone formed after a break of structure. We can also look to get involved on a supply and demand zone when a market has had a reversal of momentum. Say it was bullish and then it broke structure to the downside, reversing the momentum. We can look to get involved on a fresh supply and demand zone formed to get involved at a potential start of a trend. So guys, what rules can we use when applying supply and demand in our trading plans? We can wait for a significant break of structure just to confirm a continuation or reversal of a trend. We can identify market momentum with imbalance. This shows us that not only has the trend either continued or reversed, but it's done so with momentum, which gives more confidence and credence to our zones. And to find the supply and demand zone, we can look for the last counter trend candle before the imbalanced movement that broke structure. So guys, we're going to look at a deep dive now on the euro dollar, just so we can get a better feel for some supply and demand zones. Now, if we start drawing structure out by here, we can see that there was a significant break of structure by here, but it wasn't with momentum. We can see very corrected price action and a lack of imbalance by here, indicating that the momentum doesn't want to continue. If we follow the market back, we can find the last significant piece of structure, which is by here. We label this as a swing high. We can also see that there is a major high formed by here. Now what we're going to look to do, guys, is we're going to look for the market to break structure, and then we're going to look for imbalance formed, and we're going to look for the last demand zone formed in the last counter trend candle before all imbalance. If we get a break of this significant structure, it confirms to us that the momentum has most likely reversed. If we get a break of this major structure, the market may have reversed, but we can't be for sure, just because it doesn't take as much imbalance to break, and there could simply be a liquidity sweep, guys. So we've had a break of the major high by here. Now we can see we've had a close above. We've had a nice large candle by here. We can actually see that there is imbalance left by here. Now at this point, guys, we don't know for sure if the market has reversed. We know that the market has broken this swing low with low momentum, and we can see that there is a major high that's been broken by here. So if we were looking to go long, we would use this counter trend candle before all imbalance. However, we would look to account for the swing simply because the market may pull deeper into our zone. Plus our stop loss would be minuscule if we did have it on that counter trend candle. So we're going to play price. We can see that the demand zone did get tagged. We got a break of significant structure, confirming to us that momentum has continued to the upside. We can follow the imbalance back, guys. We have had a pullback by here, so technically this would have been the last major low. I'll just mark that out for you. Pull this across this. We can see that there is imbalance by here, guys. Now this is the last counter trend candle, but there is a giant wick by here, and we know that there is likely imbalance in here. So if you were looking to draw a demand zone from this point, you'd be drawing it like this, or you could even do that to encompass the whole candle. Personally, I would look to refine it and go down into a lower time frame just to see if we can find any lower imbalance. This is back in July time, so I won't be able to do that today. But you'll actually see that the market actually comes back into this original demand zone to start off with. And that's simply because the older zones are, the longer the market has had to replenish orders at that original zone, because they still find that zone advantageous or discounted, guys. So we haven't had any breaks of major structures to the downside by here. This was a minor swing. We did get a break of a major low by here. So this is actually the major swing high, guys. I'm just going to mark this out so we know. So that is the swing that we're intending to break. The momentum is bullish, guys. So we're still in a bullish range. We're intending for this to break, but we're looking for a potential retracement back into our demand zone first. So we can see that the market has come back into our demand zone. Like I said, you'll see that it actually comes in to this mitigated zone by here before going higher. Just going to rewind the market just a bit there. So we can see that there is no major structure broken by here, guys. So if you were looking to remove discretion, you wouldn't be looking to get involved. But I will draw a demand zone here just for you to see that the market does come back into this zone before continuing to the upside. So we've had a break of our swing high, guys. And the market has broke down, confirming to us that this is the new swing high. We're going to follow the market back. You can see there is imbalance here. This is obviously the Asia session, guys. You want to stay clear of this on most pairs just because liquidity builds up. Normally on both sides, and you'll get market sweeps. You'll know that the worst trades normally happen in this time period. So it's best to leave that alone. If you were using normal supply and demand, people will actually tell you to trade from the last counter trend candle before the last normal piece of structure. But in my strategy, we only look at significant structure just so we get more confidence in our setups. We know that there's more volume and more momentum behind our zones. We can see that this got taken out straight away. We follow the market back. We can actually see that there is imbalance here. Without this indicator, it would be hard to spot, guys, but most people would be trading from here. We like to go from this candle simply because there is imbalance. We're going to draw our zone across. Depending on your risk tolerance, obviously you could put your stop loss on the bottom of the candle. Personally, I like to use the swing, just so you know you're more likely to be kept in the trade. Consistency is everything, and we're going to play the market. And we get another break of the swing high, guys. Now, the longer this goes on, the more it is unable to sustain itself, guys. And this is because there'll be a lack of momentum each break, or the momentum will subside. So you can see that we've had a nice bullish break by here. This one, still a nice break, but it's definitely getting less and less. And you are getting this buildup of liquidity to the downside each time. You've got localized liquidity by here. Also getting a build-up of longer-term historic liquidity. So we know the more liquidity that's built up and the lower the momentum. We've also started touching into these higher time frame supply zones. We know that it's less likely that we're going to get a winning setup, and we can look to avoid the market. What will happen? Again, you can see more liquidity building up right here. The market will start sweeping into this liquidity. you'll actually see trend line taps on the way, guys, and they'll normally be perfect as well. This is down to algorithmic bots and large FIs. You'll actually notice as well, I will just draw this across. After the momentum, after the market has looked to sweep liquidity, guys, it won't always reverse in momentum altogether. It will actually look to start going back on its original order flow. I've drawn this across just because over time, these historic order blocks, guys, will have more rejection power just because the market will have time to replace orders at those zones. Obviously, these zones require more discretion, and if you are going to be using these counter momentum zones, I would recommend looking at confirmation setups from them rather than trading them aggressively, just because you don't know if the market is going to rocket straight through them due to momentum. So you can look at fresh imbalance, and you can look to get involved. Obviously, by here, there is no counter trend candle, but you can see that the wick of this candle is higher, so you would use that instead. There's not really any break of structure, guys, so I wouldn't really want you looking at that. But you can see that the market does come back into these imbalanced areas before continuing to the upside. So you can see imbalance by here, comes back in, imbalance by here, comes back to reject that, imbalance by here, comes to reject the last order block. So very simple, guys. I do recommend using swing structure just so you've got significant structure breaks to confirm that momentum. If you're just trading with sort of minor structure there, you are going to have a bit of a harder time picking high probability zones. The Vaga Academy is up and running, guys, and you can get access now through the link in the description. It includes all the knowledge I've picked up on over my 7 years of trading, and you can be one of the first to learn my simplistic single time frame approach to trading the markets. The course covers 4 hours of content, including my blueprint on market structure and the free setups that I trade personally, and you also get access to the premium community, which includes daily support and price discussion from members trading the same plan, and also weekly forecasts and breakdown videos from myself. I hope you have a lovely trading week. I will catch you in the next one. Peace out.